Buckle up, strap in. Half price homes now knocking at the door. All right, friends, welcome to the show. Always an honor and a privilege to be with you. I hope you're all doing great. Buckle up and strap in. Hold on to your hats and your glasses. We have another barn burner report for you today. Could half price homes be knocking at the door? Well, my friends, it's happened before, hasn't it? 2008, we saw half price homes. That was a big, ugly housing crash that ushered in an even bigger and uglier recession. And the challenge with this housing bubble that we're currently in and the taming of it, it's exhibiting exact, if not more significant behavior than what we saw in 2008. So anybody ruling this one out clearly just has to sugarcoat it due to financial gain in the markets. They're maybe in the industry. It makes sense. You can't fault them. There's nothing wrong. I always say here at the show, hope for the best. Prepare for the worst. That way you come out somewhere in the middle. But we got to expect the unexpected at this point. I mean, just like the crisis was ushered in overnight, blindsided the whole globe, you have to expect the unexpected. But today we're going to take a level-headed realist look at the probability and likelihood that we could see, in fact, half-price homes make a return. And I absolutely believe they will. See, one of the things as an active real estate agent myself, helping a lot of you with your real estate needs, thank you. If you need help, of course, there's an email in the description below. I'm happy to work with you. But the realities are this, friends. We have to understand the waters we're swimming in now. Absolutely shark infested. I mean, they are disastrous, really. But the realities are real estate is very local. All areas will behave differently. Even the areas that maybe you're sitting in today that didn't exhibit extreme bubble behavior, because there are areas of the country that didn't exhibit extreme bubble behavior, maybe some normal appreciation. In some areas overheated, similar areas that we saw in 2008, and new areas actually joined the party in this housing bubble due to migration that took place because of the crisis. People, for whatever reason, started to migrate to different areas, remote working, you name it. People just started to leave the metro areas and the dense populated areas to get into a little more rural areas. But now that we are open again and companies are doing layoffs as well as pulling people back to the office, the writing is clearly on the wall. So some areas might be slightly recession insulated in that respect, but I don't believe anybody is deep cycle recession proof. Case in point, back in 2008, even my area where I live today, and I know many of yours, typically what I tell people is we are recession insulated, but we're not recession proof. We might be the last to get hit, maybe even the first to rebound, but we got hit in the last recession. We saw those big price reductions take place, 20, 30, 40%, even in the $1 million district. So you can't rule anything out. If you enjoyed, and I shouldn't say enjoy because I don't believe you did enjoy it unless you sold at the top of the bubble, which we helped many of you do, of course. If you enjoyed extreme appreciation in your city, town, or area, it was short-lived in a sense, and it was unrealized wealth. You felt rich on paper, and then you spent differently, so it didn't really help you at all. This time, we have a really bigger elephant in the room to acknowledge, which is, in fact, inflation, the two-headed monster that's out of the cage. Runaway inflation in a risen interest rate environment. That is a recipe for disaster. And like I was about to say, the data points now are just showing us a mirror image of what we did in 2008. And what do I always say here? Doing the same thing over and over, expecting a different result is, in fact, the definition of insanity. So for me, as much as I love real estate, absolutely love real estate. I wouldn't change anything. I want to continue to help people. I just want us to have our heads on straight because I believe you can buy it today safely if you know what you're doing. I always say you don't get hurt when you buy at the wrong time. You get hurt when you sell at the wrong time. And so that brings us in back to 2008. We saw a lot of forced selling and people hang on. As a trained salesman, I just know once I sell you the home, it becomes all about the home and the euphoria, the FOMO, the herd mentality, the casino climate, the Kool-Aid drinking that I saw in this bubble far outpaced what I saw in 2008 for sure. I never saw waiving contingencies, buying sight unseen, going above and beyond appraised values. Those were all new things that reared their ugly head in this one. But today, to drive our point home, let's go ahead and see if, in fact, there's anything to see here, are we going to have another 2008 style crash? Maybe worse, not as bad. Let's go read an article. Then we're going to meet back here to wrap this one up. Let's get started. All right, friends, buckle up and strap in. Today's article comes from The Hedge. Just like we saw in 2008, home foreclosures are starting to surge. Home foreclosures have shot up for the second year in a row as concerns grow that owners are sitting on a negative equity time bomb. Figures from data firm Adams show that around 186,000 foreclosures have been filed in the first 6 months of the year. The trend is being driven by an uncertain housing market and soaring mortgage rates. It continues to get worse, not better. Let's get back to the studio so we can wrap this one up. Friends, welcome back. So there you go, knocking at the door. And listen, friends, listen. 2008. Up until this point was the biggest bubble on record. This bubble grew faster and bigger and is cooling off even quicker. Foreclosure data is already coming in. People are hanging on to those homes. And like I said, it comes down. I get it. I get it because I walked in those shoes in 2008. I hung on to an upside down asset for a while until eventually I was like, this thing's got to go. Now, luckily for me, and I hope for many of you, and I'll be here to help you guys with that as well, if this is you, if you're upside down and you're now hanging on by your fingernails, your house poor, you're dragging a depreciated asset along for the ride, you better get with your realtor and get to the bank and say, I'm listing this house as a short sale. I have a legitimate hardship. I can't keep up with the payments. If you don't accept it, it's going into foreclosure. I'm going to leave the keys under the mat and walk away. This is what we saw in 2008. So now it becomes the percentage of likelihood: correction, recession, depression. There's only 3 levels of an economic downturn. We're in the correction phase as we see the tippy top of the bubble now start to trend the other direction. We are now recording property declines on a national average, but it's just getting started. We just crested. So now if we can't stop it there, we will in fact end up in a recessionary level, a 2008 style recession, which I believe would be a miracle. And I hate to say that. I really do, because I didn't like the last recession. I would clearly just prefer to stay in a correction phase. But I think based on what we did to the economy and the fractures that we're currently seeing, it's pretty clear we're heading into recession. The bigger challenge for me is the depression cycle. We've always had them throughout history, approximately every 100 years. And we're in the depression cycle mathematically, again, according to historical data. So if there was ever anything that could deliver another depression, I would say the crisis delivered it. In final thoughts, I come to you as a friend, as a content creator. Somebody wants to see you not only win in real estate, win in life. Understand, the biggest artificially created housing bubble ever produced in world history with zero organic growth probably isn't going to sustain itself. We looked at an article today communicating that for us. I believe 2008 is in fact knocking at the door, and quite possibly another Great Depression. Pains me to say that, but I'd rather be prepared for something, have it not happen, than have something happen and not be prepared. In the meantime, I'm going to continue to ring the bell, sound the alarm, raise awareness every step of the way, because it's not only what we need, it's in fact what we deserve. If you appreciate the content, I want to humbly ask you to give the video a like, subscribe to the channel, leave a comment below. I'd love to hear from you. Social media links in the description of this video if you'd like to contact me there, along with links to channels I've appeared on I think you might enjoy. If you need help buying or selling real estate here in America, I have the biggest network of top-rated agents in the nation ready to assist you. It'd be our honor and our privilege to do so. Email in the description for you as well. Also, if you're watching from your television set today and you enjoyed this video, gonna love the next video, and there's an easy subscribe icon for your convenience. As always, thank you for your time. Please go make it count today, and I'll see you on the next video.